This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus, you got 9 out of 10 stars from the Coin Bureau guy. Bityard. Hello everybody, welcome back. So I'm going to show you something on the long-term time frames as well as the short-term. So we've got good news and we've got bad news, but then the bad news could also revert into good news depending on how you interpret the good news first. Hopefully that was a riddle that made perfect sense. It made sense in my mind. So we've looked at this before. This is your 10-year history of Bitcoin. These white lines represent the halvings. They're the ones that took place, and the next one that's predicted to be roughly around this kind of area. So one thing we can see, and we've talked about in the past, is that the halving doesn't necessarily mark the top nor the bottom. It's more or less a non-event. But what we do see is that tops get placed within the first quarter of the way through after a halving, and the lows get printed, more or less in the after the center into the third and fourth. Again, that happened around here, so almost like a third of the way through after the halving we found our peak, and about 2/3 of the way through we found our bottom. Same deal over here. I mean, it's almost like a double top, but this was the absolute high. So again, you're about a third of the way through, and we're yet to determine a bottom. But you would say that the bottom is likely to be formed, as far as time is concerned, what looks like probably about 2/3 of the way through, maybe. We spend basically 3 years going up and 1 year going down, and so we've been going down. If you measure it from the absolute peak, so far we've been going down for about 242 days. So it would suggest we've got about 3 months or so left, which is why I've been saying if you look into safely buy into Bitcoin safely. And again, there's more to it than just time, but you'll be looking for the next cycle to begin more or less around September, between September and November. And that wouldn't just say marking the low. The low would likely be in before then, as we can see. We'll just look at it a little bit closer on this chart here so we can see. The low would likely be formed before then. As we saw around here, we had a big dump, and then we spent basically 3 to 4 months going sideways, accumulating basically. So the low is in way before the cycle begins again. Cycle beginning over here basically. Cycle low formed here, and we basically went sideways for quite a long period of time. So it doesn't necessarily mean that between now and September, October, November, we will dump down to ridiculously low levels. That's not necessarily going to happen. We could almost suggest that, similar to the last bear market, the major moves have been done similar to here, and yeah, we did dump down to quite significant lows, and we trickled down a little bit lower, but we spent 1, 2, 3 months going sideways, and that could be what we're doing now. If you think about we are now in July, so we've got July, August, September. Maybe this is what we're looking at now. We're looking at basically scraping lows, not necessarily forming major new lows, but basically scraping and testing lows, basically being boring and sideways before a new cycle begins, maybe as early as September. And if you think about it in this format, which is effectively one giant consolidation pattern, which is all a bear market really is, it's an enormous consolidation. We've got a fix on that right now, and we'll be looking for this to break out of this at some point, September, October, November, and that would mark a change of behavior. We might not go straight up, we might go around for a little bit in an accumulation fashion, and then start the major uptrend maybe next year. Either way, you look for a change of behavior, and at the moment the behavior obviously hasn't changed to a significant extent on a daily, weekly or monthly. It's still majorly a downtrend, obviously. As far as time is concerned, yeah, fair enough. That fits very nicely with the way that it's always done. So if you just take away all the FUD that you continue to hear, whether it's traditional market FUD, economic FUD, or Bitcoin FUD, or any of it really, you take away all of that, and you can sit back and look at this chart and go, okay, it is what it is. Now, on top of this is an interesting thing to think about. And again, the MACD is lagging, but it shows momentum change. Now this is a monthly, so if you're going to talk about lagging events, you know, the monthly MACD is going to be the all-time greatest at that. So the top obviously here, we found ourselves coming down dramatically. We bumped up and then we got a negative cross, and we got 1, 2, 3, 4, 5, 6, 7 ticks on your histogram there. Notice on the 6th tick marked the low. The 7th tick, despite continuous divergence and another deeper red tick, the 6th tick is where we found our low on this bear market, and then we spent basically a good portion of that going sideways. That was one bear market. Again, second bear market, found our peak on our way down, negative cross over here, fair play. 1, 2, 3, 4, 5, 6, 7 red ticks on the histogram, continuing to diverge, but on the 6th tick we found ourselves a low. So that's 6th tick, 7th tick, obviously red, but didn't find a low. So what have we got going on at the moment, I hear you say? This is what we've got going on, same old deal. So we got a negative cross on the histogram, 1, 2, 3, 4, 5, 6, 7 ticks on the histogram, with the 6th tick so far showing the wick low. This doesn't have to match exactly, obviously. This isn't something that you'd look at immediately and go, well, this is bullish. Quite the opposite. You wouldn't look at a diverging histogram on anything and say, well, that's bullish. You'd look for the opposite. But because they were looking at a monthly here, we can at least match the two bear markets prior to this one and go, well, actually, on the 7th one did actually mark the low prior to that on the wick low. Might not happen this time, but that's what it did last 2 times. So as far as time is concerned, it's matching. As far as MACD is concerned, it's currently matching as well. And if we haven't scraped the low already, I think the low is so close to being in right now that as far as, you know, buying into something like Bitcoin, obviously not without me, you know, giving financial advice, I think you'll probably, if you were to buy into Bitcoin here or any time where it goes lower, I think you'll probably spend less time underwater than you will above water. Because remember, these market cycles, they spend more time going up, effectively 3 years in an uptrend, 1 year in a downtrend, more or less. That's how it works, how it has worked. And so if that is the case, then you'll be expecting a downtrend to continue potentially between now and September, October, November, before an actual uptrend begins again, and an uptrend which should be sustained for a 3-year period. That doesn't mean all the way up to the moon, it just means that you'll probably spend less time underwater than you will above water, and that over time you'll look back and go, well, actually that was a decent entry point in all fairness. At the time it didn't feel like it, and that's how I felt when I bought down here. I didn't feel particularly overconfident in what I'd done. When you see a chart that basically looks like this and you buy into it, that's the chart that I bought into. Basically I bought into the chart here, and I was thinking, you know, it does kind of go against everything that you know, or I suppose for the majority of people, they don't want to buy a chart like that, and you get called all kinds of things. And you say, look, you've got to understand there's a cycle involved here. I'm expecting the cycle to continue as it always have, but you know, at the moment, I appreciate what you're seeing isn't necessarily a bullish chart, is it? That's not a bullish chart. It doesn't mean that my entry point was perfect. I didn't buy the low, but I bought below 4,000, and it worked out so far. And obviously, even now, you know, that Bitcoin that I've got is still okay. So that is your long term, and that was the good news. The bad news is that we're in a 3-day weekend. The last time we had something similar to that was when we broke down below 30,000 over here. So I love the Americans, they're great, but you know, they're having the 4th of July weekend party now, so that basically means that there's nothing going on Monday. So we got quite a long period of time without actively trading going on. So absence of money, absence of volume, basically might even move over into selling. And with a chart that looks like this, there's really not a great deal to suggest that we're going to go up anytime soon, or should I say until this bank holiday weekend, or whatever they call it. This I don't know, what do the Americans call it? Vacations? I don't know. It's a party anyway. They got their independence from the Brits, and fair play to them. So yeah, I would personally favour this actually breaking down below this level, which is just around 18,800 or thereabouts, more or less, which are these two bodies over here. And if that's the case, then yes, scraping the last lows is relatively likely, to be honest with you. Now, if we can hold this area, which we may hold this area, which is basically 19,000. If we can hold that throughout the weekend, then great. I think that next month is going to be a bit of a green month across the board. I've been saying this about the everything bounce for traditional markets, and the decline in commodity prices, which feeds into inflation. I might make a video about that later if I have time. But you know, it goes back about 2 or 3 weeks when I was talking about this, and I gave it a 2 or 3 week time horizon to actually start to show, you know, those results. You know, trying to front run the CPI data basically is all I was talking about. And so yeah, I do predict that this month we might start to see what's known as a bear market rally, or the everything bounce. We started to see it sort of materialize a little earlier than I expected, and then it got sold off. I think that I still think that there's a good chance that it'll happen. But we do need, you know, trading weekdays, traditional markets to actually help us with all of that. The problem with crypto is obviously it trades in a 24-hour, 7 days a week. It doesn't care who's having a bank holiday, who got liberated from who, or whatever, or you know, how pretty the fireworks are. It's going to continue to trade, right? And or potentially trade or sell off. So I think in theory, the sell-off is more likely than any kind of uptrend within. You know, with this weekend. If it were to pump up, I can't see it being possible to break above this 20,000, which is obviously going to be a resistance, as we see. I mean, candle bodies on the 4-hourly have all closed since we've broke down below 20,000. They've all closed below 20,000. We did have a pump up. It's no big deal. It's what it is. Came straight back down to the bottom of the range. So I think we are playing this tight range at the moment until it decides which way it wants to go. So it's basically 18,800 to the down, 20,000 at the top. There's no real conviction, I would say, on any of them, any momentum, nor should they be, really, as it's a weekend and the big money is partying right now, so they're not going to be wanting to do any of this stuff. So short-term time frames, I do favour downside, although I'm not married to that idea. Long-term time frames, I think all of this and any of these lows that come in from here should be thought about seriously as an investment opportunity for Bitcoin. I think this is the moment that most people would have, you know, killed for back 18 months ago. You know, I wish I'd bought it at $20,000. I wish I'd bought it at $20,000. Now those people right now they're all calling for 3,000 and stuff like that, and they're monitoring Twitter for any more little tidbit from somebody. But realistically, the only thing you really need to think about is detach yourself from the news, detach yourself from Twitter, detach yourself from anything, and just focus on what has been so far a relatively reasonable cycle formation that continues to behave in the same way, exactly the same way. This one might be a bit more aggressive, but it's exactly the same. It's exactly the same. So I'm suggesting now that we are close to forming the bottom if we haven't already. Any lows that get generated from here should be thought about realistically as dollar cost averaging into those areas, because I believe strongly, if we were thinking about the way that this chart has behaved over time, I seriously believe that you'll spend less time in negatives than you will in positives, because that's the nature of this. If you were to be buying any of these areas down here, you'd spend less time underwater than you would above. If you've been buying any of these areas, even the 6,000 down to the 3,000, you spend less time below that those entry points than you would above it. And it's the same deal now. There's no reason to doubt why it's not the same deal. I believe it's exactly the same deal. So let's understand that and reflect on that as something that is historically been the case. And when you're doing trading, I mean, you do have to put your neck out sometimes and go, well, I've thought about it. I've thought about it hard. You know, I don't care about the FUD or the Fed or any of this nonsense. Let's just think about it rationally as what I'm looking at here, and this is what I'm looking at. History repeating itself once again, offering me the opportunity to pick something up. What could be a historical low over the next few years. Anyway, I'm going to leave it with you there. Hopefully that has been enlightening. Please let me know if it hasn't or if it has. And yeah, maybe I'll see you in the Telegram. Links in the description below. Thanks for watching, guys. Take it easy.